Hey everyone, welcome back to Streetwise Economics. It's Isaac here, and this is not just another vlog. This is a real update on how I've been growing my trading account by 42%, while the S&P 500 is down by minus 5.25% year to date. I started this journey with just 300 Canadian dollars and I added 15,000 US dollars. And as of 29 April 2025, my trading account in terms of the equity is now sitting at $30,533.39 and over 9,000 Canadian dollars in gross profit. This past week alone, my account jumped from 35%, if you watched the video last week, to 42%. That's a plus 7% growth in 1 week. I walk you through exactly what I traded, how I'm managing the risk, and the routine that's helping me to beat the market, even while preparing on a family and business trip next week. Quick disclaimer before we dive in, this video is not financial or investing advice. This is a video meant just for educational purposes. I'm simply sharing what's working for me based on my personal experience, risk tolerance, the capital that I have, and my comfort zone relative to the risk. So remember that trading involves risk, and trading is also not for everyone. Always do your own research and never trade with money that you can't afford to lose. Now, with that said, let's get into how I have been building this account with a defensive and disciplined strategy. The first thing is I'm going to share with you my strategy overview. What's been working right now, because if you look at the S&P 500 or the US equities, currency market, and even the bond market, there's been a lot of volatility, and most of the people that I coach and also sometimes in the groups that I have, people have been in the red. In other words, their accounts are down. So what's been driving my performance? The big push for me this week has been the leap strategy on SPY, which is just a long-term call option that expires in more than a year. I took a 1 year leap when the market pulled back for SPY with a delta of 0.80. That expires on 18 June 2026. So what that means is if the delta is 0.80, if SPY moves by $1, right, I would actually get $80 for the whole option contract in that regard. So that can print, and this happens either way. If SPY drops by $1, it means my account would see $80 drop in that regard. So I bought this high delta SPY leap because I like the fact that I would use a small capital deployment. In that case, it was close to $10,000 position, and it was deep into the money. And what I like about that is that it delivered a clean profit. When it went up, I closed the position and I made, I think it was 1,700 US dollars in like 3 days. So that was a good thing for me. But let me be clear on this. I'm not throwing that. My core strategy is built around cash secured puts and covered calls because those give me weekly income while staying defensive. That's my strategy when I'm trading. I like to stay defensive. With cash secured puts, I earn premiums by offering to buy stocks I like at a discount. And if I get assigned, I just turn around and sell covered calls for more income in that particular position. So, what did I trade this week and also last week since I made the report? Here's a snapshot of what I traded. as of April 29th. I actually have a Google cash secured put with a strike price of $157.50, and Google right now is trading at 156.34, and it means it's right in the money. But the nice thing is that I got $100.43 premium, that is $143 in cash upfront. So what that means, even if Google closes at $57, I'll still be even more than $1 profit, because in terms of my effective cost basis, I would say $157.50 minus the premium that I collected, $143. So that would be my effective cost basis. So, but again, Google is a stock that I want to own even for the long term. So fundamentally, it's a strong stock. So I have some cash secured put for stocks with ticker name SHOOJAKK and MUR. That's an energy stock. And these are smaller cash secured puts, all expiring on May 16th, because like I said, I'm going to be traveling, but I'm just collecting premium for stocks that I otherwise want to hold. And I've done research on them and they've really pulled down, which is something that I am very comfortable with. As you probably know, I hold yesterday, I had 10 shares of Aritzia. They are reporting their earnings today. I actually added, I think that was some more shares, 18 shares today, right? I had a few Canadian dollars and I converted some other Canadian dollars, because if they miss their earnings and the stock drops, I'm going to add some more shares on Aritzia. I believe it's a business that has a strong fundamentals. I understand that there are tariffs, right, that can possibly affect their supply chain. You know, they are exposed about 35% to China, but the idea is they have a clean balance sheet. I didn't see any, long-term debt on their balance sheet, which is something that I like. Businesses that have very good fundamentals are going to thrive in this environment. A lot of businesses with poor fundamentals will actually, possibly close shop, because I was watching GDP numbers today on the 30th, as I'm recording. The GDP numbers were down, and even President Trump was indicating that the tariffs impact have not yet kicked in. So I'm anticipating that the equities market in the US is going to see a lot of volatility, even another drop for most stocks. Of course, there are different stocks, some that are defensive that do well in that particular case. Stocks, if you understand, that are kind of like recession proof. I also have some shares for Berkshire Hathaway. I wanted to add some more shares, but today I actually played a quick cash secured put. But I didn't want overexposure, especially given that there's the Berkshire Hathaway meeting and this weekend, and I don't like to trade stocks, especially getting into earnings. So I just exited, closed the position with $13. That's profit in a few minutes. I think that was 5 minutes. And that's how I trade. Now, I have another cash position on LBRT. That's another cash secured put that I am managing. And of course, I indicated last week I did take the leap on SPY that had a delta of 0.80. Now, I'm going to probably do a video to explain a little bit more about these leaps or options contracts with high delta. But today I just wanted to share with you these updates on this trading portfolio. But everything that I trade, I have researched it, I understand it, and I follow and I build a watch list that I trust. And I only trade stocks that I know and not based on hype. I don't just jump in because the stock is down or up. No, I have my watch list. Even as I'm looking here on my computer, I have my watch list that I am particularly interested in. I follow their earnings, the news in that particular stock. Now let's look at how cash secured puts and covered calls work in simple terms. I've said this in this video, in this channel, but if you are new to covered calls, let's say you want to buy a stock like Apple stock. So let's start with the cash secured puts. But you do want to buy it at a lower price. So I can sell a cash secured put at that strike price. Let's say Apple is right now is trading at $210.63, right? Let's say I want to buy it at $200. So what I would do is I would sell a cash secured put. You go on the options contract and then you look for the strike price, let's say $200, and it will give you the delta. In other words, the probability that is going to get there. Let's say for 210 you'll be paid a premium, let's say of $150, right? So what that means is that if it has a 1 week expire, let's say it expires in a week's time, what happens is if Apple doesn't get to $200 by that expiry date, you still keep the premium that you will have been given upfront. But if it drops, let's say to 199, it means you will still be required to buy Apple shares at $200. So that's 20,000 for 100 shares, because one option contract is 100 units. So that's the idea. But let's say then I get assigned, it goes to 199. So that means in terms of the loss, if I got $150 in premium, I'm still $50 in profit before I remove, subtract the fees. So what that means is that I can now sell a covered call. So I have 100 shares in that regard. And then I can, let's say, okay, I'm gonna sell a covered call. In other words, if Apple, I'm gonna say, let's say the strike price of 210. So I will be paid, let's say, $200 upfront, right? Then if Apple, in a week's time, if I have that as the strike price for a week, I would then say, let's say Apple goes to 210, I would still make from the difference between my average price. In that case, let's say it's 210, and it's 200. And if it goes 210, that's 1,000 for 100 shares, $1,000 plus the 200 that I got upfront. So you see, in both cases, I will have won, and that's a defined risk reward ratio in that case, because I know that, okay, if this happens, this is what's going to happen. But if Apple stock, in that case, in that 1 week, in the case of the cash secured puts, doesn't get to 210, I get to keep the $200 in premium plus the shares. So that's how I'm playing this. It's slow, steady, but low drama trading, and it fits a volatile market, in my view. So that's what I've been doing. Now, in terms of the trading lessons that I've learned, I've shared this, but I've learned a lot in this journey, and here are my key takeaways. One, risk management is everything. I never bet unless I have a setup that I am comfortable with, and I always want to keep a cash buffer. Two, I only trade what I understand. Like I said, I don't understand, if I don't understand a business model or a particular stock, I stay out of it. I was talking to my uncle today, and I saw Starbucks dropped by almost, I think, more than 7%. And they were like, okay, they are having a hard time in China because the shops there, the tariff talk is affecting them. So I was like, okay, what do you think about this? But the most important thing is like, you know what? We are not really comfortable with this stock. The most important thing, I go to the financials, I do fundamental analysis, and I want to understand who is the CEO, what are the insiders doing. So that's why I have a watch list. So I didn't proceed with that trade. Now, trading isn't just about charts. That's something that I have learned, and it's about connecting the dots between the macro and the price action. So I want to keep an eye on what's going on, in the economy. If I see, like right now, President Trump is having a cabinet meeting, I want to pay attention to that, right? Now, I'm planning to travel. By the time you see this, we'll be almost ready to go, God willing. But I will be flying on a family and business trip to a spot that I will disclose to you guys in the future for next week. But I will be managing my trade smartly. So my destination is 6 hours ahead of New York time, where I normally trade, and I will be trading in the late afternoon. But I'm kind of like, I want to spend more time with family, but also venture into the next phase of Streetwise Economics. I'm going to be sharing with you guys more details on that. But I like to make sure that I don't take a lot of risk. So I'm going to be light on my trading in terms of the positions that I have, and I'm going to manage my positions by the end of the week. But I'm going to post this video on Sunday this week, and that will be on the 4th of May. So if you want to follow me and learn more about my trip and what's going to be coming up, or if you found this video helpful and you would want to stay on the loop, subscribe to this channel. Of course, if you haven't and you have subscribed, thank you so much for the support. I'll be breaking down this topic and some insights regarding trading, investing, travel economics, and global investing. I'm also encouraged by people who share some comments. Tell me how you are trading or investing in this environment. But if you want to uh, actually learn how to trade options profitably, feel free to book a one-on-one coaching session on www.streetwiseeconomics.com. I'm going to put the link so that you can actually book some time on the comments below. Now, I will be sharing some updates whilst I'm away if I get a chance. But before I go, I wanted to especially thank you guys for being part of this journey, and let's keep growing and trading smarter together. And in conclusion, I always want to emphasize that this is just what I'm comfortable with. Trading comes with the risk. It's not easy to make money in the market. So make sure you understand your own risk tolerance and trade on strategies that fit your risk profile and your goals. If you take one thing away, this is something that you should always remember. Don't rush, don't gamble, stick to strategies that you understand and what you can control. Until next time, trade and invest wisely, and may the markets be on your side. Safe travels, good trades,